Hello, I'm Drew Halfmann from UC Davis Sociology. In this video, I consider some explanations for why the United States was so late to establish something approaching universal health care coverage, as it did in 2010. I'll begin with a few standard arguments for why American welfare state programs are generally stingier and cover fewer threats to income than those in other countries. One approach focuses on national values, which is also known as political culture. It argues that the American values include individualism, market fundamentalism, and suspicion of centralized authority. As a result, Americans oppose most government solutions to social problems. This national values approach has several shortcomings. First, it focuses on values established hundreds of years ago, but does not explain how or why these values have persisted over time. My own answer to that question would focus on institutions. The approach also cannot explain the enactment of policies that run contrary to these so-called American values. For example, the policies of FDR's New Deal, which established old age pensions, unemployment insurance, and aid to the poor. The national values approach also treats countries like they have a single culture, when they actually have many cultures. American values do include individualism, market fundamentalism, and suspicion of centralized authority. But they also include many other values such as egalitarianism, democracy, civic republicanism, constitutionalism, populism, and sexism, racism, and nativism. Lastly, national values approaches fail to recognize that values and symbols have multiple practical meanings. Political actors work hard and often successfully to mobilize values and symbols for their own purposes. Broad national values do not determine the content of policies, but instead provide a set of cultural resources that political actors can use to promote their favorite policies. The challenge is to understand how those actors deploy these values, symbols, and meanings, and how institutions, events, and policies facilitate or hinder that deployment. Still, I don't mean to suggest that the so-called American Creed was irrelevant to American healthcare policy. Instead, its main contribution was the institution that the American founders left behind. Political institutions such as private health care, judicial review, federalism, and weak political parties reflect, at least in part, American traditions of anti-statism, individualism, and suspicion of authority. Another set of arguments about the stingy American welfare state focuses on the strength of social classes, labor and capital, and the political parties that represent those groups. Scholars have argued that the United States has a stingy welfare state because American business is unusually strong and American labor is unusually weak. This is definitely part of the story. Another set of arguments, to which I'm quite sympathetic, focuses on institutional factors such as political fragmentation, federalism, electoral institutions, judicial review, and policy legacies. In the case of health care, Bayland and Hacker argue that the legacy of private employer-sponsored coverage in the United States has hindered the enactment of universal coverage. The public got used to the existing system, and people with coverage worried that any new system might hurt them. In addition, Weissert and Weissert argue that the existing system of third-party payments has insulated insured people from the costs of medical care and caused them to expect that no expense will be spared for their medical care. The existence of private programs has also caused policymakers to develop limited conceptions of the appropriate role of government and led to the establishment of organized interests who defend their profits. With the growth of healthcare costs, it has become increasingly difficult to buy off such interests in such a bloated sector. The American policy legacy also has increased the complexity of the healthcare issue. It is already a complex issue because it deals with scientific and technical knowledge and change. But the public-private mix increases complexity by multiplying the number of actors and programs in American healthcare. This complexity makes it more difficult for the public to understand whether they will win, lose, or remain unharmed by proposed healthcare reforms. It also makes it easier for healthcare opponents to make misleading claims. In the case of the ACA, many elderly people believed that it would deny them care and that it cut benefits for all Medicare beneficiaries rather than some. Former vice presidential candidate Sarah Palin was even claiming that Obamacare would establish death panels to deny expensive care to the elderly. Paul Starr argues that the question of why the United States was so late to establish universal health insurance is actually two separate questions. First, why did the United States fail to cover industrial workers before World War II? And second, After insuring the elderly in 1965, why did the United States fail to establish universal coverage through some combination of private and public insurance? On the first question, he argues that during the Progressive era, the weakness of labor allowed insurers, employers, and doctors to dominate healthcare politics. During the early New Deal, labor gained strength, and Roosevelt believed in active government, but he had other priorities: unemployment insurance and old age pensions. The power of the AMA and its skillful use of anti-communist rhetoric further discouraged action. During the late New Deal, Roosevelt had a tremendous congressional majority, but he made the mistakes of trying to pack the court and balance the budget, sending the economy back into recession. He was also operating in a politically fragmented system in which the conservative Southern chairs of congressional health committees wielded great power. Starr also focuses on the sequence of American welfare state development. In Europe, health insurance was enacted before old age pensions, but in the United States, the order was reversed. As a result, American healthcare reformers made the strategic error of trying to copy successful elements of old age pensions, the program we call Social Security. Every expansion of Social Security added new contributors, and this improved the program's finances. But expansions of healthcare had a different logic. New beneficiaries worsened the program's finances. In 1965, the founders of Medicare had avoided cost controls in order to gain the cooperation of doctors, but later reformers were reluctant to expand such a costly program. In addition, the 1960 reform had created two programs: Medicare for the elderly and Medicaid for the poor. This helped create a powerful elderly lobby and encouraged the elderly to see themselves as more worthy than Medicaid recipients. Finally, labor unions were also reluctant to build on Medicare because its coverage was not as generous as the employer-provided plans that the unions had won through collective bargaining. Finally, those who were already covered, whether by employers or by Medicare, came to see coverage expansion as just another tax increase. My own approach to the question of why almost universal coverage took so long combines several arguments. I share Starr's focus on the weakness of American labor, but note that the under-democratization of the South and the fragmentation of the American political system mattered a great deal as well. The American Constitution established federalism and the separation of powers in part to protect slavery and ward off threats from below. But once slavery was abolished, these institutions continued to protect white supremacy. And after Northern Republicans abandoned Reconstruction, Southern planters and their allies disenfranchised blacks and poor whites to establish a one-party authoritarian regime that utilized the many veto points in the fragmented American political system to block national measures for African American equality. These political institutions aided racial exclusion and discrimination, but also the defeat of measures to promote class equality. Southern elites blocked unionization, depressing wages nationally and allowing non-Southern businesses to threaten that they would move to the South. Along with Republicans, Southern elites used fragmented political institutions to defeat national measures that increased the power of unions or expanded social welfare provision. And the national weakness of labor reduced wages and support for full employment macroeconomic policies, progressive taxation, and social welfare policies. I also share Hacker and Starr's focus on policy legacies. The development of private employer-provided insurance and coverage for the elderly strongly conditioned later policymaking by reducing support for reform among those who were already covered, creating and strengthening powerful interest groups who opposed reform, insurers and the elderly, and establishing a system that was too expensive to expand. I also share Quadanio and Hacker's emphasis on the power of medical interest groups, but I stress that these groups were empowered by the combination of a fragmented political system and weak party discipline or cohesion. For example, the Clinton reform attempt of 1993-94 was defeated by the combination of interest group opposition, the power of Democratic congressional committee chairs, and infighting among the Democrats. The key to Obama's 2010 success was that he bought off interest groups or persuaded them that the existing system was untenable. In addition, the Democratic Party was much more cohesive as the result of several decades of party polarization, the development of a Democratic healthcare consensus during the 2008 presidential primaries. Finally, federalism offered points of access and demonstration. Health reform reached the agenda during Clinton's presidency in part because the come-from-behind special election victory of Senator Harris Wofford in Pennsylvania, who had emphasized health care reform, put it on the agenda. And Massachusetts Governor Mitt Romney's health reform was the key precedent for Obama's proposal, though Romney later tried to deny this was true.